Hi and Assalamualaikum everyone. I am Is, the CEO of Nestle company. I'm glad to welcome all board members to the meeting. Present at the meeting today, Ms. Fardiana, our Financial Manager 1, Ms. Atika, our Financial Manager 2, Ms. Yusra as Maybank representative, while Ms. Lydia as representative of Nestle Berhad shareholder. Our agenda in this meeting is whether we can apply for loan to make an investment in our big project, which is Project Relief. So basically, Project Relief builds on the pioneering Kenabatan Relief project and which helped plant 1 million trees in Sabah. By widening its reach in Sabah and expanding for the first time to Peninsular Malaysia, Nestle allocates 18 million ringgit to plant 3 million trees by 2023 through this Project Relief. So let's start our meeting with discuss about company financial performance. Oh yeah, before we start, any amendment from the previous meeting? Alright then, so before making a decision, I want financial manager to explain about company performance. So we start with Financial Manager 1. Ms. Fardiana, you go first.
Sure, Ms. Izzati. I've done a trend analysis for Nestle based on our company's revenue statement. I've attached the income statement that I reviewed. The quantity and percent change between 2020 and 2019 are slightly different based on that statement. So, what I'm going to imply here is that our firm continues to have good results. Current ratio. In 2019 at 0.65, higher ratio reflect the ability to pay its short-term obligation on time compared to 2020 at 0.60. This can be to measure a company's ability to pay off current liability in 1 year with its total current assets like money, assets, and inventory. The upper the current ratio, the higher the company's liquidity position. Quick ratio, also known as acid test ratio. ATS measure a company's ability to meet its short-term obligation with its most liquid asset and therefore exclude inventories from its current asset. Based on the graph, the higher ratio reflects the ability to pay its short-term obligation without rely on inventories is on 2019 at 0.31 compared to 2020 at 0.27. For inventory turnover, in 2019 show higher ratio at 6.24, reflect the effectiveness of inventory to generate sales compared to 2020 at 5.77. And the total assets turnover ratio is higher ratio 2.02 in 2019, indicate the effectiveness of total asset to generate sales compared to 1.89 in 2020. Next is fixed asset turnover. The better fixed asset turnover are in 2019, which is 4.32, prove the effectiveness of fixed asset to generate sales when compared to 2020, which is lower, which is 3.80. For average collection period in 2020, we got 31 days and in 2019, we got 33 days.
Alright, thank you Financial Manager 1, Ms. Fardiana, for your explanations. Next, Financial Manager 2, Ms. Atika, can you explain more about it?
Thank you, Ms. Izzati. And Fardiana, I will continue with Profitability Ratio.
In 2019, at 12.90%, higher than 2020 at 10.20%, indicates better income to shareholders in 2019. It indicators of a company money health. The gross margin shows a company profitableness once more accounting for non-operating expenses. This could be a company's ability to get earning on balance expenses and taxes. In this case, 2020, which is 36.32%, are lower than 38.58% in 2019. That indicates higher contribution margin in 2019. It shows the proportion of revenues they are obtained to high non-operating price. Example like paying interest. That is why investors and lenders pay such attention to that. Based on the graph, we can see greater productivity are in 2019, which is 16.53% compared to 2020 at 13.97%. In addition, profitability is evaluated relative to prices and expenses and analyzed as compared to assets that mentioned 24.68% in 2019 has high ratio indicate that high return on company's investment, not less important as the others return on equity are very important to shareholder to quantify company's capability to earn and get back on its equity investment. In 2019, a 101.20% higher ratio indicates higher return to shareholder compared to 2020 that are lower than that at 19.21%. Despite the decline in the profitability ratio in 2020, shareholders and investors need to be confident and believe that Nestle company is still strong in Malaysia and the worldwide. With the worldwide revenue 95.9 million annual revenue, and this is the latest competitors. First, Mondelez International, well known for their Oreo, just have 26.6 billion, Kellogg's 13.9 billion, and Mars 37 billion annual revenue. So take it back.
Okay, thank you very much, Financial Manager 1 and 2, Ms. Faryadiana and Ms. Atika, for your explanation about the company performance. So, Ms. Yusra, as Maybank representative, do you have any comment about it? Do you think our company can obtain the loan or not?
Thank you, Ms. CEO. I will explain about leverage ratios. Leverage ratios are used to determine how much debt a company has owned in balance sheets. Firstly, debt ratio based on bar chart in 2019 is 75.61%, while 2020 is 18.53%. That means debt ratio increased 4.92%, and Nestle has a higher debt in 2020 that may be risk to the lenders. Next, debt to equity ratio in 2019 is 61.19%, compared to 2020 is 87.48%. This shows Nestle have financial problems. Number 3, time interest earned based on the trend analysis in 2019 is 22.43 times, while in 2020 is 21.32 times. It shows decrease between 1.11. But Nestle company can pay interest back even though have higher debt. Lastly, equity ratio in 2019 is 24.39% and 2020 is 19.47%. That means for every Malaysia ringgit owned by shareholder, the company owns RM1 ringgit to creditor. As a Maybank representative, I think Nestle company is not suitable and unstable for company to invest and make a profit.
Thank you for your explanation, Ms. Yusra, our Maybank representative. So you said that Nestle company is not suitable to invest due to height of debt. right, but I still want to invest into the project A. So what do you think, Miss Lydia, our company shareholder, of my ideas to invest in the project and planning to apply for a bank loan?
Thank you, Ms. Izzati. Assalamualaikum to all of you. Hi, I am Lydia. As you know, I am a shareholder. As a shareholder, I'm totally concerned about the company performance and dividend payout. Based on the explanation from Ms. Yusra, I can see the company has a problem paying off the debt. I just want to make sure that the company get the highest profit every year and maintain a good performance so that the company can have ability to pay off the debt and can keep profit earning that earmarked for reinvestment in the company. So, I have a few questions for your company. The first one is what your company does in order to increase the company's asset. The second question is what could be quarantined in return by investing in your company? And the last question is what action will your company take to reduce debt and to pay off the existing debt? Can you answer all of the questions?
I will respond to the first and second question. For the first question, you asked what will company can do to increase the company's asset. So, what will we can do is making more sales including cash sale and credit sale, and it actually will increase our asset in terms of cash and account receivable. We can increase the company's asset by doing more promotion. For the second question, which is concern the guaranteed return by investing in our firm. Actually, our purpose is to increase the number of shareholders' words. It means that once you make a profit, the first thing you will do is create a shareholder with the highest grade that they will pay for the firm.
Companies can take steps to reduce debt by use working capital financing strategies. Like short-term financing can help to reduce the debt. Maybe it is risky, but it is lower cost borrowing because it low interest rate and the payback duration are kind of short, that making debt manageable in time. Other than that, company can use debt to reduce its debt ratio by increasing sales revenue. This can be achieved by raising the prices, increasing sale, or reducing costs. Maybe having a discuss with the supplier to give us discount, and the extra cash generate can then be used to pay off existing debt.
Alright, thank you, Miss Lydia, for your explanation about it. So, Miss Yusra, can you give advice for this issue as Maybank representative?
As a Maybank representative, I advise that the company need to improve profits such as improve sales revenues and lower costs to lower debt to the equity ratio.
Thank you for your advice. But I think I can't make an investment for the relief project this time. Because I, as a shareholder, I do not want to take high risk by investing for this project. I hope your company can openly accept my decision. Thank you.
Thank you everyone for your commitment to attend our meeting today. For Miss Lydia, I'm so sorry for our Nestle company performance. We will try better next year to gain more profit so that Nestle can invest to the project after seeing the state of highly indebted company. If I insist on investing in this project, the company's debt is likely to rise. As a result, I decided to not to invest in the project this time because I was concerned that the company will suffer significant losses. So, meeting dismissed, stay safe and you can leave the call.